UK retail sales for the month of June are coming better than expected. This is breaking news a short while ago, up by 0.7% month on month when the market expected a 0.2% rise. There were increases across all the main sectors: food, non-store retailing, all except automotive fuel, which is slightly lower. Food store sales volumes bouncing back with a 0.7% growth in June 2023, following a fall of 0.4% in May 2023. This could have something to do with the fact that people aren't buying other things, the discretionary items. They're going for things they have to buy to feed their children, to feed their family. Non-food store sales volumes rising by 1% in June 2023, following a fall of 0.5% in May. The automotive fuel store sales, interestingly, volumes falling by 0.3% in June, following a rise of 1.7% in the month of May. So that's retail sales. Earlier this morning, GfK consumer confidence showing that the British consumer turned more pessimistic last month, which seems to fly in the face to some degree of the retail sales numbers. The context of high inflation and rising interest rates, according to the market research firm GfK, consumer confidence fell to a negative 30 this month from a negative 24 in June, the first drop since January, biggest month-on-month fall since April last year. In a GfK statement, it says, Joe Staten said, reality has started to bite, and as people continue to struggle to make ends meet, consumers are pulling back in spending on discretionary items. Let's take a look at what's happened with sterling. We have actually got a little bit of a lift for sterling in the session in today's trade. I just want to take you through a 5-minute candle chart here showing you what's been happening. The midnight break that we saw when we saw that data release was back here for GfK. But this is the retail sales data, which has seen a lift for sterling. I don't think it changes things in terms of interest rates this week. We've got a rowing back of interest rate expectations. But I think on the whole, the picture still remains a little bit clouded. We've got probably 2 interest rate rises to come. And this is really what sterling is pricing in. I think with the recent rises we've seen. The most recent fall this week, I think, has been all about what's happening with the US dollar. Let me just quickly work out where we're going to go from here. I think this line of Fibonacci support, which were pretty much the highs we saw back on the 16th of June, I think that's going to be the price target if you are short on this still, despite the fact we've got a little bit of a rise today. This is the area of support down here at 128.10. 128.89 is where we're trading at the moment. And I've yet to see whether or not this recent downtrend that we've got here for sterling will be arrested or will be stopped with this small rise we've got today. But I think broadly speaking, retail sales looking good, consumer confidence not so rosy. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.